All right. Hey there. Sam with you here. We're midday on February 7th. Next coin up per members voting on this is VEN. VeChain to Bitcoin. Now, so I've got a 4-hour chart here on Binance, but just to be consistent, we'll come over here where I like to check on them. VeChain here. Now, this is some of these coins, getting so much traction so quickly. That's an indicator that you got a strong project here. So this has only been around 6 months. Already over 2 billion in market cap, 54 on the metric scale here that I like. Now, I'd like to see this a little higher, but again, it's only been around for 6 months. But so given the total here over 50, this, certainly tradable. You can see where it's trading. Almost all of it is against Bitcoin. It's all about 52% of it is on Binance. You can see here, interestingly, almost 20% is to Ethereum. Kind of interesting. So, but the bulk of it's to Bitcoin. So the request was to look at it against Bitcoin. Now, my guess is here, because we've done this coin recently, or I have certainly. It's not this side here where I think it gets a little tricky is in the correction. So we'll break that down. So this is pretty. Okay, so I don't want to make it sound like it's easy. It requires some degree of a knowledge base with Elliott Wave to get the count right here. And one thing that can make this easier, if you're unsure about some of these spikes here, is to go into log scale, because you'll just get better separation here. So you can see here we get a nice 1, 2, 3, 4 comes down. We don't overlap the 1, so we get a nice impulsive wave into the 1. Here's the deep retracement. So just same stuff. Just so the point, I always make a point of mentioning this. What's the point of going back through all of this and verifying these pivots? Is really just to see if it's trading technically. That's all I'm after here. So if that's my 1 and that's my 2, well, I know the 2 can come anywhere from the 50 to the 786. So that's right in the pocket. Very, very sweet between the 50 and the 618. We go up we go. And so so far so good. That's a valid 2. So then I would want to kind of check that 3, see if it's trading with Elliott relationships here. Looking here now. So if I take the length of the 2 up from my 1, well, here's a little reaction at the 1618. We actually get up and to and through the 2618, which is an extreme. That's definitely an extreme for a wave 3. Now there are times, certainly in crypto, extreme is relative, but certainly it's technical. So I've got a nice 1, I got my 2, then I've got a technical 3, and I get this shallow 4, which is not uncommon. That's where you would expect that, either. So we've got maybe a flat here, so we get a little A, B, C. We come into this, so we're going to check that. So just working from my 2 here up to my 3. Okay, so here's the 38. So we'd anticipate a 4th. 38 is about as good as you can get it. Where do we go? To the tick, right to the negative 618. All right, so that's just perfectly technical. I don't know how it gets any better than that. So 2 to 3 we complete. So what do we have now? We have a completed 5-wave structure, of which now I'm going to take it out of log scale. All right, so let's do that. Just maybe that's easier for you guys to see and relate to. So if we work on the assumption that we've got a completed 5-wave structure, then all we're doing, I'm just going back to the low here where I've got this wicked off with the yellow line. So there's a 1, maybe there's a 2 down here somewhere, 3, 4, and 5. Okay, so we're operating on the assumption that we've got a 1 in. So there's a 2 somewhere down here, just as we measured the other 2s. Now we're just going to pull from swing high to swing low. Okay, so this is a bit of a tell. Now we don't want to assume that low is in until we dig into this correction here and see if we've got a technical pivot here. But just from this side, all right, I can already tell you that algos have started buying there. Look at the reaction. So that, again, that's an indication. Where's their first target? Here's the negative 23.6 up here. But again, as I often mention, if it's going to go into a full Elliott count, we know that the 1618, which would be a target for our third, is going to be very close to the negative 100. So that's just a good eyeball reference for us to know in terms of how high could this be going if this is going to play as a 1-2. Now, we don't know that 2 low is in. So let's go dig into that, because I think that's what members are looking for, is some analysis of this correction. So it's not the easiest one you've ever seen. See, here's an easy one, right? You're expecting that. That's exactly the kind of pattern you're expecting in a 4th. Just right to the 38, rips higher, right to an algo target, down we go. So now we're sitting at the 50 again. You know, as is often the case, you know, the first move to the 50 is often not the ultimate low in terms of the correction low. So we certainly could have one more move down here to get this down to, remember, a second can be anywhere from the 50 to the 786. So we have this huge zone down here. Well, so how do you dial in on that? Well, you know, one thought is you can be a buyer at the 50 in smaller size, because that could be the two. So algorithms start buying there. They're already in a nice profit. They'll continue to buy it if it rolls over and comes down here. But we know we got a big range, so that's too much risk to take. We don't need to take that much risk. Let's see if we can get more precise with it. So I'm going to switch over to, I'm going to take it down to an hourly, and then look at this correction and see if we can get a handle on what we're seeing here. And what are the odds that we have a good pivot here? Well, you gotta look at this and you know, you gotta think a little bit. Okay, so this is a relatively complex correction. So it's not, but you know, there are a few things that will just jump out at you. So what do we know? So we know from just basic Elliott wave theory that markets trend in 5s, they correct in 3s. Okay, so but there can be complexity within that. So the first thing that I see is I see some glaring examples of 3s. So here's an ABC, right? So here's an ABC, right? Here's an ABC. So wait a minute. That's a lot of ABCs. So you know, what does that mean? We've got complexity here. Well, so we know that an A wave can certainly break down into 5 waves. We can have a diagonal. We can have a leading diagonal into the 1. So if I'm just off the top of my head, now again, I don't script these. I don't work this out. This is just my thought process. So you know, take it for what it's worth. So here, this would look to me like I've got a 1, and then given that perfect 3-wave structure, that would suggest to me I've got a 2. If that's my 2, well, you know, here's the likely candidate for a 3. I get a little A, B. Here I come up. That looks like, I'm going to guess that's probably fairly technical relative to these pivots. Well, now I get a little gnarly down here, but it looks to me like I come down here and I complete a 5th here, because then I get another A, B, C. So if I start just labeling those and think, okay, A looks like I got a B, I got a C. Well, how does that affect my count? Because wait a minute, I've got a 5-wave structure here. You always tell me, Sam, that corrections are in 3 waves. Well, all we're looking at is subdivision here. So most likely what I have here is my A wave coming down here. I've got my B wave here, and you know, we don't know yet whether or not we're done here. But this is a contender. This is a contender. So I'm just going to put that off to the side. Now let's put that up in a larger degree so we can kind of get a handle on it. So let's just check these. Now, is this technical? We know a 2 can be anywhere from the 50 to the 786. Well, here's the 618 golden pocket. We're pushing it. We don't get to the 786. We roll over hard. Okay, here's the first algo target, second algo target. So could that play as potentially a 3rd? Well, let's look now. So 4th overlaps the 1. So I know I've got a diagonal. Okay, if I've got a diagonal, I'm going to measure from the high, the start of it. I'm going to measure from the beginning of the 1 wave to the 4th. So I'm going to take the length of the 1 through the 3. So this is a common play. Now I'm not saying you couldn't check others, and you might want to, but the first one you're going to check is the length of the start of it, the start of the 1 through the 3 to the low of the 3. In this case, the low of the 3, looking for the 4 to be anywhere from the 50 to 618. Where do we go? Boom. Okay, so what's the target? -23. So they hit it, they spike through it, and then we get a reaction. So, you know, likely you've got some algorithmic activity here off of tapping this target. And then here's the 50 down here. So it could be that they just haven't gotten the 50 yet. Or could be that those that sold it here, and I promise you that's algorithms selling it there, are taking profit there, thus the reaction. Now we roll over yet again. So we look here and say, now what? Now I've got an entire 5-wave structure here. What's the next thing I'm going to do? I'm just going to look for the retracement through the entire thing. I guess it's not that complicated, right? So now I've completed a 5-wave structure. Just like when I completed the 5-wave structure on the way up, I just pull swing low to swing high. Where's the 50? Here's the 50. Now I'm doing the same thing. 5 waves completed. Where's the 50? Boom. Where's their target? Down here. Okay, so let's scrunch this up a little bit so we can get a handle on this. Okay, well so we got a complex correction. All right, we can deal with that. That's not crazy. So here's the one. Here's our A wave. A wave is completed in a leading diagonal, ABC to my 50, just right by the book. So where are the candidates here for my C wave? Well, if I'm working off of this 50, so you see where we are now. So we're stuck between two 50s. So here's the 50, here's the 50. Right, so I'm in this range, 50 to 50. That's an algo fib fight. So who wins? Well, we don't know yet. So what are we trying to? We're just trying to trade it. So if this is going to be a C wave, so if this plays as the C, that leaves them hanging down here. But you defer to the larger time frame. Right? So since the larger pattern here we're putting in is a one wave here, the trend remains up, and this is the correction of that trend. The length of the A wave relative to the C. It's not ideal. So this is a reasonable contender. So if you're looking to trade this, I'd be very suspect of this low. Knowing that this is you've got this potential buy zone down here, where you could easily see that would be a sweet spot for algos. They could take profit off of this 50, right? So there's their target. Here's the 618. They're going to those that sold it here can take profit here and then can start buying in defense of this 618. So you've got kind of a double dip down here. Now we'd want to look at this pivot. What's happening here? So I'm just going to look from the last place I got a reaction to that low. I get a little pop through. I get a little spike through the 6.5. So that there will be algos that will now flip because as they get through the 6.5. So what do they do next? Okay, and again, right? So don't misunderstand me. There are, God knows how many algorithms are running in the market at any one time. I'm not saying this is the only algorithm. This is just an algorithm that we can identify and we can follow. And it's very consistent in all asset classes. So what are they going to do? The algorithm that sold it here, right? So we have algos, we have trends, we have all of this happening on multiple time frames. So algos they tend to like the 15, the 1, the 4, and the daily. So if we look here now, so this might be an algorithm working off of the 15 minutes. So we pop the 65. So what do they do next? So the next thing they do is they take the next 50. So if this is the low, this is the one that broke. Okay, so here's the 50. Do you see that? That's all again, it's not that complicated. So here's the 50. Right? Does that mean that's the absolute low? Not necessarily. That means we got a reaction at the 50, which is what you didn't. That's what you're expecting. So the next time you see it, well, there's the 50. You go, I got a reaction. Well, does that mean that correction is over? No, I'm not saying that. But we're getting the reactions that we anticipate because all we're trying to do is get in behind them. So where are they going? Well, here's their target right here. So here, this algorithm that bought it here, that's their target right here. There's the negative 23. There's the negative 618 back up. The negative 618. Do you see this in blue here? The negative 618 right next to the 618 from the swing low to the from the high here to this swing low. Right? We still have that 618 to contend with. That will be resistance going back through because the algorithms that sold here at this 50 will defend it all the way until that breaks. And then they'll take the next 50. That's what they do. It doesn't mean that they make money on every trade. They don't. But eventually, they get into the big trend by just buying the 50s. That's what they do. So let's take this off now and say, okay, wait a second. What could this be? So we don't have, well, the majority of the people that I work with, we don't have the deep pockets to just keep flipping at 50s. That takes a lot of capital to do that. And we don't need to. So why take that much risk? What we're trying to do is get in here and say, is there an Elliott wave count in here that I can kind of dance around and get on the right side of whatever they're doing? So that looks like I might have a 1, 2, 3. This could be a 4. I could be in the midst of a 4, so if I open that up, you can kind of see that. So how would we quantify whether or not we're going up or down? Well, we got to get a 5-wave structure. We're trying to qualify this pivot. Could that be our low? Is that our C wave? This isn't easy to get a handle on. You probably squeeze a 1, 2, 3, 4, 5. So you could make the case that's a good low. And then we could probably make this case here that coming out of that, we can get a 1, we can get a 2, we can get a 3, 4, or maybe this is 1. We don't know, right? So potentially you might have this, a little ABC here, simple correction followed by more complexity. Too soon to call it. So what do we need to see? We need to see that go up. This needs to go up here and give us a new high. So we have a series of higher highs, which gives us a 5-wave structure. That's all that's happening in a 5-wave structure, right? So higher highs, higher lows gives us the 5-wave structure. Okay, can we get that? If we get that, then we have a potential 1 wave. Okay, still can't be absolute about this low, because the next thing that has to happen is that low needs to get tested. So here we come back down this way. So we come down this way. Are we going to? So we know a 50 can be any. Pardon me, a 2. If this plays as my 1 wave, right? So that's a contender as a path that would set us up trying to establish this is a good pivot, knowing. So we're trying to get that qualified. Can that be? Let me get over here so I can put this back into context. Can this be our C? Can we work with that as a trade? Is the risk reward worth it? Do we have enough evidence to support the idea that this is our 2? And all we have here is a front run on the 50, as they do all the time, right? That's why I always tell you, you can't put your stop, or pardon me, you can't put your entry right on the 50. Because they're going to front run it and they're going to leave you hanging. So can we get that pop up here? Well, if we do get that, then all we're looking for is the next 50. Right? So if we go up here, we know that the 50, or if we're going to get this as a 5-wave, then we're looking for the 2. Well, here's the 50 to the 618. We know it can go that deep, right? That's why, you know, maybe the first bite is here. You can look to add. If we're going to go down, we're going to. All the 2 is challenging this low. Right? It's a test of the low. Is the buying strength strong enough here to support this correction here? Or you could think of it as this way. The people that bought here, or the algorithms that bought here, if they get up here, maybe they get to their algo target. As they start to take profit here, is the buying interest strong enough to withstand a challenge of that low? Because remember, we still have the algorithms that sold it here trying to get down here. See that? So can we come down here, and is the buying interest strong enough here to take us up yet again? Okay, now we're getting stronger. Now we're getting more evidence to support that this is a hard 2. 1, 2. Now I'm going up. Am I going into a 3? If I'm going into a 3, well, I start measuring that. Well, what's the first thing I got to get through? I got to get through this 50, right? Because algorithms that sold it here are going to defend it again. They're going to defend it all the way up here. So for this to play as a 3rd, I have to get through that 65. Now I really know where I am, because I know that the algorithms are going to flip. So the next thing that they're going to do is buy the next 50. You see how it's just the same thing. It repeats over and over and over again. Same thing. Right? So understand, I'm combining 2 things. So there's what the algorithms are doing, which has nothing to do with the Elliott wave. Nothing. So, and that confuses people. I'm using the Elliott wave to try and tuck in behind them and just follow what they're doing. That's all I'm doing. So the Elliott wave helps us with the risk reward, because if we're looking at an Elliott count, we can be more definitive about where we're wrong. That doesn't mean the algorithms are wrong. It just means that we know where we can get in with some precision, with a risk reward that we can handle without having to just continue to flip until we get on the right side of it. Most people don't have the pockets to do that. So can we get a 1 into the 2? If we get that, well, now we pull out and we say, okay, why is it worth going through all that trouble? Right? Can I just buy across in the moving average and my MACD is pointing up, and you know, I read on Twitter that this is a good project. Can I just do that? Yeah, you can. You can. That's not. I mean, that's just lazy. What? You know, this is not that hard. Not that hard. Right? It's not rocket science. Okay, so what kind of target do we have up here? Well, we know, as I was kind of showing you earlier, that if we're going to get that 3rd way up here, right? Is it worth screwing around in here to try and get in there with knowing that this is my target? Right? Is it worth it? I don't, what do you trade? Why are you trading? You want to be a buy and holder? Man, have at it. Have at it. I'm just trying to show you there's a different way to do it that would let you do this with much lower risk, but you're going to get stopped out a whole lot more. So you got to be prepared for that. Yeah, I get stopped out way more than I hit target. Way more. That's the reality of trading. But what do we got here? I got basically 12.5 to 1. So how many little losers can I withstand? I just need to get that. It doesn't take a lot of times to catch it, for that to offset all those little losers. And that's the name of the game in trading. You don't even have to take that much risk. I can do this. There's the 786. I don't even need to take that much risk. Now I'm at 20. It's damn near 25 to 1. 24.56 to 1, and that's if I put the stop on the other side of the 786, take it up to the 65 and say, okay, well, I'm willing to take that little bit of risk right there so that I can get a 44 to 1. If you got a better way to do it, I'm open to suggestion. You know, I've been doing this for 20 years. And I've looked at everything. I don't know of a better way. If you've got one, send it over. I'd like to look at it. All right, guys. That's one to watch. I'll wrap it there.